Imagine you're looking up at a stadium scoreboard,
Yeah.
right? And the numbers flashing up there are so massive, they almost just don't compute.
Yeah, it's wild.
We were talking about $111.2 billion in revenue in just 3 months. And a historic $100 billion authorized to just buy back their own stock.
Right, which is just an insane financial flex.
Exactly. But right in the middle of this blinding display of power, the architect of the whole system drops a total bombshell. I mean, he's stepping down.
It's the kind of earnings report that forces the entire financial world to just, pause.
Seriously. Welcome to this deep dive, everyone. Today we're unpacking Apple's Q2 2026 earnings call. And our mission here is to synthesize a massive stack of sources just for you.
Which is a lot of reading, by the way.
Oh, a ton. We've gone through the official earnings call transcripts, all those incredibly dense financial statements, and, the post-game analysis from networks like Bloomberg and CNBC.
And we really want to examine the actual mechanics behind these numbers because whether you're a tech enthusiast or really just anyone trying to understand the broader global economy, decoding Apple's playbook is, well, it's a masterclass in global business strategy.
It really is. I mean, they're a bellwether.
But to actually grasp the strategic position Apple is in, you have to look past the top-line revenue and really examine the scale of their capital allocation. Like, they authorized an additional $100 billion for a share buyback.
Okay, so assuming everyone listening basically gets the math of a buyback, retiring shares, so the remaining slices of the pie are just worth more, what is the actual strategic implication of a number that huge?
Well,
Because, I mean, $100 billion, that's literally the GDP of a small country.
it really is. And it signals a profound level of confidence, honestly, but it also points to a specific reality about their current growth phase.
How so?
Well, when a company with over $28 billion in operating cash flow, just from this one quarter, mind you, authorizes a $100 billion buyback, they're essentially telling the market something important.
Which is?
They're saying they don't see any external acquisition target out there that offers a better return on investment than just investing in their own ecosystem.
Oh, wow. That makes a lot of sense.
Yeah, that they are aggressively shrinking their float, which mathematically boosts their earnings per share, even if, say, their revenue growth were to just flatline.
Right. And their margins are obviously doing a lot of the heavy lifting there, too. Apple reported a gross margin of 49.3% for the quarter.
Which is just, it's wild.
In the context of the broader tech hardware industry, that figure is, it's practically unheard of for physical goods.
It really is.
Like, if we use a bakery analogy for gross margins, right? It's not just about how many cakes you sold to the customers.
Exactly.
It's about how cheaply you can bake those cakes in the first place.
Okay.
And think about the auto industry. A high-end legacy automaker like a Ford or a Toyota, they are thrilled like doing cartwheels if they hit a 15 to 20% gross margin.
Oh, for sure. Because they have to deal with, steel, union labor, shipping massive physical objects all over the world, complex supply chains.
Right. And Apple is dealing with custom silicon, rare earth metals, global logistics, and yet they are kissing a 50% margin. They're extracting, software-level profitability out of physical hardware.
Yeah, and what makes that 49.3% margin so incredibly unusual is the sheer cost of the raw materials involved here. Specifically, those highly advanced silicon chips.
Right, they aren't cheap.
Not at all. But Apple manages this because of their absolute leverage over their suppliers. I mean, they negotiate component pricing years in advance at volumes literally nobody else can match.
Okay, but wait. Let me push back on this for a second.
Sure.
If they are throwing off GDP-level cash, and the margins are practically 50%, and they're buying back $100 billion in stock,
yeah,
why did the Bloomberg analysts note that the stock's initial reaction in after-hours trading was mostly just, flat?
Yeah, the muted reaction.
Exactly. A muted reaction does not track with the record-breaking quarter. What's going on there?
Well, you have to understand that Wall Street prices Apple like a utility that somehow also grows like a startup.
Oh, I see.
The market basically prices in perfection with them. So they didn't post a wild anomaly that shattered all expectations today. They posted a solid, highly predictable beat.
Okay, so it's just business as usual for an absolute juggernaut.
Exactly. But that muted reaction is primarily driven by underlying anxiety, forward-looking anxiety. During the call, their CFO, Kevon Parikh, explicitly flagged rising memory costs.
Uh-oh.
Yeah, and those rising costs are going to put immense pressure on those beautiful gross margins we were just talking about in the upcoming quarters.
So the market isn't reacting to the $111 billion Apple just made. It's reacting to the cost of the components Apple has to buy tomorrow.
Precisely, which honestly makes this an incredibly fascinating time for a massive leadership change.
Oh, right, the transition. So on September 1st, 2026, Tim Cook is handing the CEO reins to John Ternus, and he's transitioning himself to executive chairman.
Yeah, marking probably the most significant leadership shift in tech right now.
And Cook's legacy is just monumental. I mean, over a 15-year run, he took the company's market cap from around $350 billion to a staggering $4 trillion.
Which is hard to even fathom.
Totally. And he grew that services business into a $100 billion juggernaut. He's widely considered like the greatest supply chain and operations maestro in corporate history.
He really optimized the machine that Steve Jobs built. But, Ternus represents a really fascinating pivot for the company.
Because of his background.
Yeah, he's a 25-year Apple veteran, but his background is deep hardware engineering. I mean, he was instrumental in the iPad, the AirPods, and perhaps most importantly, that massive transition away from Intel to their own proprietary M-class silicon chips.
So, wait. We are moving from Tim Cook, a legendary supply chain and operations guru, to John Ternus, a pure hardware engineer. Does this signal like a fundamental pivot in what Apple values most?
That's the big question, right? And the analyst commentary from Bloomberg paints a really compelling picture here.
What are they saying?
They note that Ternus is seen internally as having, quote, the mind of an engineer and the soul of an innovator.
Oh, I like that.
Yeah, from a strategic standpoint, a CEO who deeply understands silicon architecture is perfectly positioned for the whole AI era, but it also suggests a potential return to bolder product risks.
Like taking bigger swings.
Exactly. Ternus might be the kind of leader who's willing to ruthlessly cancel projects that just aren't working out, much like Jobs did, actually, and rely on his engineering intuition to find the next entirely new category of device.
Well, Ternus is definitely inheriting a massive hardware success right out of the gate. I mean, the iPhone 17 is officially the most popular lineup in Apple's history.
Yeah.
It's hitting a 99% customer satisfaction rate in the US. And then there's the new MacBook Neo. It's a $599 laptop, and the demand is just off the charts.
And that MacBook Neo is such a vital strategic wedge for them right now.
So
it's aggressively penetrating the education market. Like, the earnings call specifically highlighted that Kansas City public schools are completely replacing their massive fleets of Chromebooks and Windows PCs with MacBook Neos.
Wow, whole fleets of them.
Yeah. Apple is actively capturing the next generation of users before they establish brand loyalty elsewhere.
But, capturing those users right now involves navigating that severe global supply chain headache we touched on earlier.
Yes. The memory issue.
Right. Let's look at the mechanics of this global memory shortage, because this jargon needs some decoding. Memory specifically, the DRAM and NAND chips that store data, has seen this massive price surge.
A huge surge, yeah.
Seaport analyst David Goldberg pointed out that the cost of these memory components has effectively tripled over the last year. Tripled.
And we really need to understand why that tripling happened, because it's not just a random supply chain hiccup.
Right. So what's causing it?
Server farms are currently buying up all the high bandwidth memory, or HBM, that's required for training these massive AI models. So the semiconductor foundries are pivoting their manufacturing lines to produce HBM because the margins are incredible. And that pivot physically crowds out the manufacturing of the standard mobile DRAM and NAND chips that go into phones and laptops.
Creating a massive supply vacuum.
Exactly.
It's like, imagine a massive legacy airline buying up all the global jet fuel futures to supply a new fleet of jumbo jets. They aren't just securing their own flight routes. They're actively starving the budget airlines who have to buy their fuel on the spot market.
That's a perfect analogy. And those budget airlines, which in this case are Android phone makers and Windows PC manufacturers, they're being forced to raise their retail prices just to survive that 300% component cost surge.
Apple is over here acting like a financial fortress. I mean, they are using their massive cash pile to secure whatever memory inventory is left, but they are holding the retail prices of the iPhone 17 and the MacBook Neo completely steady.
They are willingly absorbing the higher memory costs and just taking the margin hit.
Which is wild. And the Seaport analyst actually gave Apple an A+ for this specific maneuver.
Yeah, he did. Because it's ruthless. They are using their balance sheet as a weapon to aggressively grab market share away from rivals who simply cannot afford to eat a 300% increase in memory costs.
And really, those rivals can only afford to eat that cost if they have an ecosystem. Like an Android hardware maker usually makes their profit on the singular sale of the physical phone.
Right.
If the internal memory costs more, the phone has to cost more. But Apple is playing an entirely different game here.
Because of that $31 billion services ecosystem we discussed earlier.
Exactly.
Services like the App Store, iCloud subscriptions, Apple TV, Apple Care, those carry a gross margin of over 76%.
76%.
Yeah. So Apple can afford to sell you a $599 MacBook Neo with a compressed hardware margin because once you are in the ecosystem, you start paying for iCloud storage, you're downloading apps.
You're trapped, basically. In a good way, but you're in there.
Exactly. And analysts estimate that Apple can recoup those absorbed memory costs from a new user in about 9 months, a luxury their competitors simply do not have.
And the underlying reason those memory lines are constrained in the first place is the exact same reason tech capital expenditures are exploding across the board.
Yep.
The global build-out of artificial intelligence infrastructure, that's the real elephant in the room.
AI is definitely the defining technological shift of the decade, and Apple's approach to it is entirely contrarian compared to their peers.
Really? How so?
Well, look at their research and development spending. It accelerated rapidly, up 33% this quarter to $11.4 billion. However, they are heavily focused on what they call agentic AI, built directly into the devices.
Right, which is often referred to as edge AI, meaning the neural processing, the actual math required to generate an AI response, happens right there on the silicon inside your phone or your Mac, rather than being beamed up to a distant cloud server.
Exactly. Which is why having John Turnus, the architect of the M-class chips, as CEO makes perfect sense right now.
Oh, that clicks perfectly.
Yeah, Apple has spent the last 5 years putting powerful neural processing units, or NPUs, into every device they make. They basically laid the hardware foundation for edge AI years before the software was even ready.
But wait, the contrast here is staggering when you look at the broader market. I mean, Microsoft, Google, Meta, they are spending tens of billions of dollars a quarter on capital expenditures, or CapEx.
Massive amounts of cash.
They're building massive football field-sized data centers filled with power-hungry servers to run their AI models. Apple isn't doing that. So are they falling behind in the AI race, or just playing a totally different game?
They are playing a highly capital-efficient game. By prioritizing on-device processing, they protect user privacy because the data never leaves the phone.
Which is a huge selling point.
Right. But from a financial perspective, it keeps their capital expenditures remarkably low.
And they also mentioned expanding their partnership with Google's Gemini to handle the really massive, complex cloud queries that the phone's local chip just can't process, right?
Yeah, and that partnership is a masterstroke of capital allocation. Apple basically treats cloud-based AI as a commodity.
Let Google do the heavy lifting.
Exactly. They are letting Google pay the tens of billions of dollars to build and power the server farms, while Apple owns the user interface and the local routing.
Wow.
Because Apple isn't spending massive amounts of capital on data centers, their free cash flow remains completely pristine. It's the exact mechanic that allows them to casually drop $100 billion on a stock buyback while their rivals are burning cash on server GPUs.
That's just brilliant. And this capital-efficient strategy seems to be paying dividends on a global scale, too.
Oh, absolutely.
Because we constantly see these media narratives suggesting Apple is losing its grip abroad, particularly facing fierce domestic competition in China. But the quarterly numbers completely defy that narrative.
They really do.
Greater China revenue surged by 28% to $20.5 billion.
Yeah, the iPhone 17 was the top-selling model in urban China, and the Mac Mini and MacBook Air topped their respective PC categories over there.
So they aren't losing ground at all.
No, we are actually seeing a premiumization trend in the Chinese market. Consumers there are holding onto their phones longer, but when they do finally upgrade, they are bypassing the mid-tier domestic brands and just buying the highest-end Apple models available.
And India is also emerging as a massive frontier for their future growth. Tim Cook specifically mentioned he was incredibly excited about the momentum there.
Well, India is currently the second largest smartphone market in the world.
Wow.
And the third largest PC market. Apple saw double-digit growth there this quarter. What's really vital to understand is the demographic shift happening there.
The expanding middle class, right?
Exactly. You have a rapidly expanding middle class in India, resulting in a very high percentage of first-time Apple buyers.
And the MacBook Neo and the more affordable iPhone SE lines, they kind of act as Trojan horses, don't they?
They really do.
They get these first-time buyers into the Apple ecosystem at the exact moment they gain disposable purchasing power.
And it's not just about selling to India, it's about building in India. Apple has been aggressively shifting portions of its manufacturing supply chain away from China and into India.
Right, localizing it.
Yeah, and that localized manufacturing creates a domestic halo effect for the brand, making it a real status symbol for that rising middle class.
We have covered a massive amount of technical and strategic ground today. Let's do a quick rapid-fire recap of the core insights we extracted from these sources.
Good idea.
First, Apple's financial engine is just firing on all cylinders, $111.2 billion in revenue, and unprecedented margins for a hardware company.
Tech.
Second, they're navigating a historic transition, handing the CEO baton from an operational master to John Ternus, a pure hardware engineer who intimately understands the silicon powering the future.
Third, they are executing a ruthless supply chain strategy. They are actively absorbing spiking memory costs to starve competitors and lock a whole new generation of users into their highly profitable services ecosystem.
Yes.
And finally, their on-device edge AI strategy allows them to avoid the massive data center capital expenditures that are dragging down their tech rivals, keeping their cash flow exceptionally high.
Perfect summary. Now, as a quick reminder, all the information and analysis we've chatted about here today is just to help you better understand the market and is not investment advice. Investing involves risks, so please be sure to do your own homework before entering the market or consult a professional financial advisor.
Always essential to keep that in mind, especially when looking at these complex global trends. The macro environment and component pricing markets are constantly shifting.
Absolutely. Now, to leave you with a final, slightly provocative thought to mull over.
Oh, I like these.
We spent a lot of time discussing John Ternus, the hardware innovator who's taking the wheel in September.
Yeah.
Well, analysts in our sources are heavily buzzing about a rumored $1,500 to $2,000 foldable iPhone finally appearing on the horizon.
Ooh. And a device like that would require immense engineering precision to maintain those 49% gross margins we discussed.
Right, so ponder this. With a pure hardware engineer stepping into the CEO role, a leader who spent 25 years building the physical architecture of Apple's most successful products, will his very first major flex as the captain of the ship be the device that finally folds?
It is definitely something to watch closely.
It really is. Thanks for joining us on this deep dive, everyone. See you next time.
Until next time.